Quick reminder to you, or in fact a message to you if you're tuning in for the first time. If you'd like to send us a query, you can send it to us on any one of our social media platforms. We're present across the board. We're also present on WhatsApp. But if you are sending us a query, do mention your name, the name of the stock that you would like to know about, and if you bought it, then tell us the price that you bought it at, and also whether you would want a short-term or a long-term query, view rather. We've got Pintu Prasad from Siliguri, first of all, who's wished us a very Merry Christmas, and he sent us a lovely picture as well. Thank you so much, Pintu, for your kind message, and wish you the same. Rajesh, he's looking to play the ethanol theme. And we were talking about flex fuels, but he's thinking that this blend that will take place is actually going to be an interesting option from the producers of ethanol. So he has a few stocks. I'm not going to read them out. What do you think one should play from that space?
He has a very focused approach towards playing ethanol space only. I think India Glycols would be the best play. The second one would be Praj Industries. Both these companies are looking good on numbers basis, but on valuation parameters, if I talk, India Glycols is a better play. Going forward, maybe for a time horizon of 12 to 18 months, this stock can be looked up.
All right, the next one is coming in from Danny Verghese, and he wants to know whether he should accumulate FMCG stocks at the current levels. In fact, he wants to know what will be the 3 stocks in the FMCG pack that he can look at for the long term. Rajesh, I'll come to you for that one.
Nanita, FMCG as a space has always been a long-term play, I would say. And if you look at valuation, some of them are trading at a very high valuation. I think HUL would be the first pick, provided it corrects some amount, maybe 5 to 6% or 10% from the current market price. HUL would be a good play. Second one would be Marico. And the third one, of course, it would be ITC. If we talk of valuation, it's one of the cheapest stock in the entire space, trading at a P of 10 to 12, giving a dividend yield of around 5 to 6%. I think this is one of the very good stock, although it has not been performing from quite some time. But I think if somebody is ready to hold for a very long period of time, by very long period, maybe 12 to 18 months, I think good return can be expected. On the fact that the FMCG division is doing very well, even the hotels have started showing some momentum. So I think ITC is the best play on valuation parameters, and for longer term horizon, HUL, if it corrects from current market price of around 8 to 10%.
Okay, that's the view on the FMCG space. We've got a question from Neil from Delhi, and he's holding on to 50 shares of IndusInd Bank at an average price of 945. The stock is currently below that price. Of course, it's currently trading at 850, one of the few stocks that are declining in trade. Kunal, he's wondering whether to average at this juncture or should he wait?
A much better advice from my side would be to try and shift to maybe a large cap banking name, better banking stock, and that would be ICICI Bank, because it's been a strong outperformer over the last 3 months, 6 months, as well as over the last 18 months compared to the other banking names. And I think even in this leg of correction, ICICI Bank looks to be more stronger. The stock is resilient, holding above its 200 moving average. So if there is any sign of a recovery on the bank Nifty, it predominantly would be led by ICICI Bank, and I think that's why I believe you should make a switch from IndusInd Bank towards ICICI Bank.
All right, ICICI Bank looking attractive from the banking pack. Well, the next one is coming in from Niranjana Arvind, and she plans to invest in the healthcare industry. In fact, she wants to know which one to buy for the long term among the 3, Fortis Healthcare, Dr. Lalpath and Max Healthcare. Kunal, coming to you for this one.
Max Healthcare looks attractive because it's a very slow, steady, trending kind of a stock. I think over the last one to 2 quarters, it's done pretty well for itself, rallied up more than I think 30% plus in the last 1 to 2 quarters. So I think in that regards, it seems to be one of the stronger stocks. Lalpath Labs, and I think has somehow gone into a bit of a corrective phase. So the momentum is lacking for Lalpath Labs, but then what typically would happen is that many of these stocks which have lost momentum, when the market gets into more of buoyant zone, you would see these stocks picking up price action yet again. So I believe that it's prudent enough to try and look at Max Healthcare first, maybe a Fortis Healthcare as the other stock, and then probably look at some allocation which could be residual into Lalpath Labs.
Okay, we've got Rathod Chand, who's bought Bank of India shares at 299, or rather, sorry, he's taken 299 at 50.75 rupees per share. Apologies for that. I'm just pulling up the share price as I speak. But Kunal, this is a short-term query, so I'm going to come to you on this one. What does he do with this? Does he hold on?
Well, I think if it's a very short-term oriented query, then you can hold on. You can probably expect maybe a 56, 58 as a near-term target for Bank of India. But then I think you have to try and look at this investments in banking names as not just a short-term play, but more of a longer-term play. See, the last 6-8 months have been very stressful for many banking stocks, and specifically the PSU banking names. And if there is any kind of a recovery, it may not just be a 1 week, 2 week or a 1 month recovery. It could probably pan out to be a multi-month recovery for PSU banking stocks. So I believe you should probably try and position for the trend rather than for a rally. And I think in that regards, you should make a switch from Bank of India towards something like SBI or maybe even a Canara Bank or Bank of Baroda. So switch to quality if you can extend your time horizon to long term. But if you want to stick it to short term, then you can expect 55 to 58 as a target range for Bank of India.
A switch to quality when it comes to the banking pack. Well, that's the call from Kunal. Coming to you, Rajesh. Next query is coming in from Ujjwal Kumar, and he holds shares of Avanti Feeds at the rate of 642 rupees a share. Now he wants to know the fundamental view on the stock.
I think going forward, this company is going to do well, although it's consolidating from the last few sessions. But I think somebody is holding for 6 to 8 months. The kind of business is that the balance sheet is strong, the ratios are good. In the last 2 quarters, numbers were quite satisfactory, I would say, if not good. So I think one can continue holding to the stock.
Okay. We've got a question coming in from Prasant, and this one specifically for you, Kunal. He's bought SAIL at levels of 122, and he's asking if we should average at the current market price or should he sell? And also, he's looking for a view for the short term.
Average, even though SAIL is below your cost price, it's still below its long-term averages. But I see the potential of metal stocks being more exceptional over the medium to long term. So just tweak your time horizon and don't look at it from a very short term kind of a view. SAIL, Tata Steel, JSW Steel, JSPL, these are phenomenal stocks, and I sense that the metal stocks in the metal sector would eventually get into a more stronger uptrend over the medium to long term. So if you can extend your time horizon, then I would definitely advise an averaging opportunity for SAIL at current levels.
Right. The next one is coming in from Krishna Prasad, and this one is from the insurance space. So he holds somewhere around 200 shares of ICICI Lombard and 189 shares of ICICI Prudential, which he purchased since IPO in 2017. Now he wants to know whether he should hold on or switch. Rajesh, this one's for you.
Hold on to both, I would say. In this corona period, everybody has understood the value of insurance, and I think there is a huge market going forward. India as a whole is highly penetrated when it comes to insurance. So I think the business for both of them is going forward is very good. Even the other players like SBI Life or SDFC Life are also doing very well. But as far as choice is concerned, this ICICI Lombard and ICICI Prudential both are doing very good. I think one should continue holding to the stock.
Okay. All right, let's take the next one. This one's from Nelson, and he's writing in from Kochi. He's asking about Ashok Leyland, and this one's for you, Kunal. He's bought 6,000 shares at levels of 79, and he wants to know what his strategy should be for the relatively long term. He's looking for technical view.
can hold on to Ashok Leyland. Now, the only concern with a stock like Ashok Leyland is that there are some stocks which we typically classify them as leaders, which doesn't require the sector to turn. But then these stocks can by itself have a very strong hold on the entire sector, and they could be directional leaders for the entire sector. But Ashok Leyland is not a stock which is in that category. For Ashok Leyland to move, you would first need the auto sector to stabilize. You would need the auto stocks to start moving up higher, and then when the market gets into a groove of positive sentiment for auto stocks, is then where you typically find Ashok Leyland also finding its feet in terms of price rally. So not being with a leader is the more important hindrance towards long-term investing, because then you would probably want the sector to try and outperform and sustain over a longer period of time. So if that's the case, then I believe there are better charts which is in play for auto stocks. Something which I discussed earlier, Tata Motors looks very attractive. Escorts, TVS Motors, these are very strong stocks when you look at it from a longer term play. But from a short term play or from a risk reward play, I think Ashok Leyland at current levels of 120, 125 also looks very attractive.
Right. The next one's coming in for you specifically, Kunal. This one's coming in from Sri Ranga, and he's a long-term investor, and he wants to know whether he should average Graphite India at current levels. In fact, he has some holding in the stock. He holds somewhere around 200 shares at the rate of 449 rupees a piece. What would you advise him to do?
The fact that he's not bought it at a much higher price makes it a possible candidate to hold. I would not suggest an average at current levels. Had the stock been sub 400 like few trading sessions back, then probably the risk would have been far more favorable. My sense is that the stock is significantly below its 200 moving average. I think 600 is the 200 DMA. The stock is almost at 415, 416 levels, which means that there is a disparity of almost 50% from its 200 DMA or slightly less than that. So I think in that regards, there is a possibility that the stock may play a catch up. I would suggest a hold. If the stock say comes back towards say 380, then it could make a good risk reward buy if it happens very immediately. And I think from a short term play, you could look at an upside target of almost 500 to 520 if the stock gets into a mean reversion phase, which I believe could happen in the near term very soon.
Okay, this next one is also for you, Kunal, and this one's from Raghu. He's looking for an entry price for Galaxy Surfactant. What should he do with this trade?
Current price itself is a good price to enter Galaxy Surfactants, but remember that this is one stock which looks, which has done pretty well over a longer period of time. I think if I'm not wrong, the last 2 years, one and a half odd years of history for the stock indicates that the stock has been like a 3x kind of a multi-bagger. So from 1,000 odd levels to 3,400, 500 over the last, I think, few months. And then from there, the stock has gone into a corrective phase. So if you are okay to holding on to it from a longer term play, then it makes sense. The other catch with this kind of a name is that it's low liquid. So for example, today's the volume for the stock is almost like a 4,000 or 4,200 shares for itself on the NSE. So that also is one of the other concerning points, because when you try and buy a chunk of these kind of stocks, and if you want to have an exit at a price, at a comfortable price at your end, you may not get an exit and you'll have to wait for a lot of trading sessions. So that's the only catch with a lot of these illiquid names, but chart wise looks attractive.
Right, moving on to the next query then. This one's coming in from Sagar, and he wants to know about Kabra Extrusion. In fact, he holds 5,000 shares at around levels of 182 rupees, and it's a part of his small cap portfolio. He wants to know a fundamental view on the stock, Rajesh. All right. It seems there seems to be some audio issue with Rajesh. Kunal, coming to you on this one then. Kabra Extrusion.
So I think the long-term breakout has already happened for Kabra Extrusions. I think 180, 185 was the breakout point for the stock. It was like a multi-year breakout for the stock. It's done pretty well over the last 4-5 months as well, from 185 to almost like a 440, 450 where it's currently trading. So the trend is quite strong. The last 4 months of price performance have also been very strong. I think if you've already bought the stock at lower levels, I would just about suggest that you can hold on to it and ride the trend as far as it lasts over the longer term.
Okay, Kunal, next one's also for you. Lalita from Hyderabad is holding on to Z Entertainment at levels of 333, and that's the average price. She's got about 100 shares, she says. She wonders what to do for the short term.
A short-term play, Z, because of the fact that it was in the thick of news flow with, the deal with Sony, etc. There is a lot of juggling of positions which typically happen. So prior to a news and post a news, there's a lot of difference in terms of positions, the volume built up, the open interest, the derivative stance for many traders, and which is why the stocks gets into a bit of volatility and the trend gets lost. So we typically call it as a consolidation, but more volatility within a band. So ZEAL is actually going into such kind of a volatile consolidation. If you can just ride out this phase, maybe over the near term, I believe that there could be better prospects for Z over the medium to long term. So I would suggest and hold and look out for opportunities of correction. Maybe around 300, 310 level could be a good averaging opportunity for Z.
Right, the next one is for Rajesh. This one's coming in from Natarajan Ramesh, and he has 200 shares of OnMobile Global, which he bought at 140 rupees a share. In fact, he wants a long-term view on the stock.
See, the stock first thing gives very good dividend. If you look at the space it works at, space is mobile messaging and all, where we have seen other companies, that the peer group companies trading at a much higher valuation. So it can move up 20-25% from here, but it's a laggard. It's not has been not performing as per the markets, but still for a medium to longer term horizon, it's a good hold.
Okay, by the way, Kunal, this one's for you. We've got a viewer who says that you told him 4 years back to buy Tata telemarketing, and he bought 50 shares at 370. He says thank you so much for your advice. Now let's take the rapid fire segment. We've got a lot of questions coming in. So gentlemen, you know the drill. We'll keep it short. We've got Venu, who's asking about Escorts. He bought at levels of 240. He's wondering whether to hold or exit. So now this one's for you.
Yeah, hold, no brainer.
Right, the next one is coming in from Harsh Ranjan, and he wants to know whether he should buy ITC and Britannia, for the long term. Rajesh.
ITC is of course a buy, as we discussed. Britannia, one should wait for a correction.
Okay, next one's from Balan. He's got 50 shares of Hero MotoCorp at the current price. He's wondering whether to hold for the long term. This one's for you, Rajesh.
It's a good stock. Rural theme is playing well, but what I believe is on valuation parameters, if we compare Bajaj Auto and Hero Auto, Bajaj Auto looks to be better. Why not switch?
Right, next one's for you, Kunal. Jubilant Food, is it good for the long term? Coming in from Mubarak S.
This looks attractive. Stock has come back to its 200-day moving average. Risk reward very attractive, so you can look to enter.
Rajesh, Venkat Raman from Hyderabad is looking for a stock that gives a good dividend yield. Which one would you say? He's got 2 lakhs to invest in.
See, there are various stocks. The first one, of course, would be ITC. NMDC is a good dividend yield play. A small, very low liquidity stock, Palmolori investment, gives 6% to 6 to 7% dividend for the last 20-25 years. The dividend yield is that. So these are 2-3 stocks which one can have a look at, and plus the fundamentals are very strong for all these three.
Next one's coming in from Mr. B.R. Bhatia, and he wants to know whether he should average Sequence Scientific at current levels. He has bought shares at 300 rupees a piece.
This one is for
Okay, so I believe that you can probably wait for some more time. Let the stock come back towards 180 plus. I think if that happens, if there's a monthly closing about 180 plus, then it makes sense to average.
All right, gentlemen, absolute pleasure speaking with you as always. Thank you so much for joining in and for answering all the queries that you did. Viewers who we missed out today, do stay tuned. We'll try and get your queries answered when we start the query segment again tomorrow. But we've still got a lot lined up on the show, so do stay tuned. Up next is a short break, but we'll be back after that.